Hi, my name is Tania Zieglar, and I'm the lead of Global Benchmarking at the Cambridge Center for Alternative Finance. I'm joined today by Dr. Rotem, Schnor, and Karsten, Wenzlaff, and we're here to talk to you about the global trends in alternative finance from our recently published report, the Global Alternative Finance Market Benchmarking Report. We'll also be talking about some of the Canadian-specific trends that we saw, and a little bit about our upcoming research as well. Before we begin, I wanted to talk a little bit about our research process, and I wanted to say thank you to the NCFA and to TFI for this invitation to speak to you guys today at FFCON. For us, it's been really important to work with partners such as the NCFA because it allows us to really talk with the industry and understand what's happening on the ground. To that end, this research is not possible without the support of the unique firms in financial technology that participate in our survey. This past year, we received data from over 1,200 unique firms, and that translated into 2,300 unique firm-level entries. That encapsulated data from over 185 countries and jurisdictions. Now, it's important to note that this research specifically looks at the crowdfunding and peer-to-peer lending activities, so really digital lending and digital capital raising. Certainly, the financial technology landscape is very broad and in some respects a bit of an amorphous term. We've really focused our taxonomy to look at these sort of two overarching verticals, digital lending, capital raising, to really understand what's happening. To that end, we've done this report by primarily utilizing a survey. Our survey that we conduct on an annual basis is a time series based survey. We have 30 questions, of which 11 are required. And those key questions tend to look at, total transaction volumes, the number of funders and fundraisers that are participating. And when we do our analysis, we always present our findings in an aggregate format at a country level or at a model level. So although we have 2,300 firm level entries, at no point are we disclosing the information of a unique firm. The project is not possible without the help of the industry and industry bodies that exist in these different jurisdictions. To that end, we worked with 50 different local research partners, 25 localized researchers at my center and also at external universities as well. And that's really what has allowed us to conduct this research. I'm now going to introduce my colleague Rotem, who's going to talk a little bit about the research process.
So before we share the facts and figures with you, it's important to understand just how solid of a research really we have behind this. And just to highlight some of the activities that we do, first in terms of data collection, we create the list of all possible platforms around the world and revisit it every year to update it. In previous data collection, we've used 6 months to collect the data. And we've sent multiple reminders. Sometimes this requires once, and sometimes it takes 20 reminders, but we are very persistent. And this is what helps us to get the data we need. In some cases, we use scrapping technology for key, huge platforms out there, for which maybe country-level data would be difficult to report. And we do check on the repeat and non-repeat response from previous years to identify which platforms have disappeared and why, and which platforms have emerged in recent years. In terms of sanitation, we check the data that we get and try to identify any type of outlier to correct or to adjust or to approve in case this is all fine. Because we do this globally, we also try to equalize all the volumes around the US dollar, and we use the different exchange rates across countries. At the analysis stage, we basically take all the data that we have collected and we start to cut it by country, region, and report these in different figures and tables that you can find in the report. We do this so that we are able to compare different countries and regions and highlight what is unique in each type of context. So, as Tania mentioned before, the term alternative finance or crowdfunding is quite huge. And for simplification reasons, we are only highlighting a number of models here. And at the bare minimum, we can identify 3 core models. One of them relates to lending, which essentially means that any funding being provided is expected to be returned plus an interest within a certain time period. And that relates to different segments. The three leading segments are either consumer loans, business loans, and property lending. These come in two different models, balance sheet and peer-to-peer models. Balance sheet implies that the money can sit and be managed on the platform's own accounts, and peer-to-peer in most cases implies that such money is not open for the platform's own use. Invoice trading is a unique case of cash flow management, where essentially future invoices are bought today for a lower rate than their nominal value, and any profit is what investors make. In terms of equity, for the money being given, there's an ownership stake given to the funder or the investor. It could be an ownership in business, it could be an ownership stake in a future income or profit stream, or it could be an ownership stake in a real estate investment. Finally, non-profit or non-investment, more correctly, non-investment models relate to for-profit reward crowdfunding, where we do a pre-sale of a product in most cases. This helps entrepreneurs to fund the production of early stage products before taking the full risks of it not being adopted by the market. And on donation, it's mostly non-profit donation that follows early logic of donation, where there's no tangible return except for the joy, satisfaction of contributing to something that people are passionate about.
So when we turn now to some of the key global finance volumes that we found in this report, I should note that, as you can see, we're looking up to the 2018 calendar year. When we do our time series analysis, we always collect for the previous year. So for example, this year in 2020, we are collecting the data for 2019. So what you're going to note here is that we've seen some pretty big growth in 2018, but not when we include China. So when you look at 2017 against 2018, you actually will see a fairly notable shift of 27% from 2017's 419 billion to 2018's 305. This significant drop stems sharply from a decline in alternative finance activity in China. Although it is notable that China still does remain the single largest volume contributor in 2018. In this case, it was 71%. But we have seen over these last few years that the proportion of China's activity has been decreasing. And certainly in 2019, we're going to see an even sharper drop. What does that mean? When we remove China from this conversation, we actually do note that the rest of the world has seen a significant increase against the previous year, from 60 billion in 2017 to 89 in 2018. So that is a 48% increase. Turning back to the previous slide, when we look a little bit at the different regions that are very present or that are volume drivers, certainly China's coming in at 71%, which is quite significant. But then we see the United States at 20% and the United Kingdom at 3%. What's been notable is that since we have started doing this analysis, the leaders have really always been China, the United States, and the United Kingdom. And then we also note that there are other, key regions that are having significant impact. And that's coming from Europe, that's coming from Latin America, it's coming from the Asia Pacific. And then certainly in this case, we've split Canada out on its own. So obviously Canada, compared to the rest of the world, is not as big a driver, but nevertheless, Canada by itself is as large as some of the other regions, total regions that we see. For example, Latin America and the Caribbean, or Africa. So you do have one country that is actually pulling the weight of an entire region as well.
So it's important to see where Canada stands with respect to the rest of the nations. We have a distinctive club of 8 nations that have surpassed the 1 billion mark. in terms of annual fundraising volumes. Canada is just below that with $909 million US dollars in 2018. It's ranked as the 10th largest in the world. And once removing the US, it is the second largest or the largest in the Americas. When we remove all three leading countries at the global level, then Canada stands at the 7th position, and this is a very respectable spot to be, taking into consideration the relative size of the Canadian market. And we will highlight that in the next slides.
Yeah, so now I just want to talk very specifically about what we're seeing in Canada over the last few years. So one thing that Rotem noted is that of those top 10 volume driving countries, Canada is number 10, and it has actually been number 10 for the last 3 years. So you see a lasting power and a staying power from the alternative finance ecosystem within Canada compared to the rest of the world. But when we start to look at what's actually going on in Canada and we think about it in terms of the regional context, we look at the entirety of the Americas. And so when we look at the entirety of the Americas, we see the United States, Canada, and Latin America and the Caribbean. What you note is that the United States is 96% of the entire marketplace. But Canada is taking up almost 2% of it. And so that is significant. And actually, you see Canada relative to previous years actually growing a little bit. Now, Latin America and the Caribbean have seen significant growth in the last year. Actually, Latin America and the Caribbean had the largest growth against a previous year than any other region. But now turning specifically to Canada, you see that in 2018, we did see small growth, but growth nevertheless, from $868 million to $908, and this is representative of a 5% growth. Now, what I'd like to point out is that and in our report, we note that there were a couple of significant firms, in particular from the real estate and property side, that were unable to provide data in 2018. They have provided indications of where they will be in 2019, but because we can't verify those figures, we can't publish them. So that's just the one caveat. Nevertheless, Canada's year-on-year growth is still positive, albeit smaller than in previous years. But one thing I want to point out is this relationship with the United States. So when we observe the number of firms that were responsive in the Canadian market, we captured 24 domestically based firms, i.e. their headquarters are within the Canadian border. And we also noted 15 foreign firms, i.e. their headquarters are and their main operations are outside of Canada. With Canadian firms looking active and looking at activity in the United States. Predominantly, the activity that we saw from Canada, I want to go back one second. Predominantly, activity that we saw from Canada came from lending platforms. That's been where we've seen the most activity.
Yeah, so far we've talked about total volumes, and that's a bit distorting the picture because it also has to do something with the relative capacity and size of the market. So when we took the same volumes but per capita, the market changes a little bit, and it shows us that some relatively small countries all of a sudden become very powerful players in terms of the scope and the reach. These especially are highlighted in, for example, in Baltic countries like Latvia, Estonia, Lithuania. When we look into these figures in Canada, we see that Canadian volumes are more or less equal to those in Denmark with around $24 per capita. This indicates that while Canada is performing well, there's a lot of room for improvement or growth, and is a sign of optimism. Still a leading country, but probably more room for growth. When we try to see the relationship between the relative wealth of the country and the volumes in crowdfunding, we identify a positive relationship. So the more economically developed the country is, the higher the volumes we see in alternative finance. This is a bit counter to our logic, because we expect that the alternative finance will fill gaps in markets where traditional finance does not perform very well. But the reality currently is that alternative finance supplements traditional finance rather than fills gaps. This is correct in most developing countries, and Canada here is no exception. But we start to see this trend in other regions where alternative finance starts to fill gaps. This is, for example, very evident in Armenia and Georgia in the Caucasus, where alternative finance becomes very powerful. Different examples from the Asia Pacifics are Samoa, Tonga, the Pacific Island nations, Mongolia, and Indonesia. So all in all, the general trend is that economic development is associated with higher volumes, but we start to see a shift in certain regions.
When we look at the different alternative finance models that we saw in our report, what we did note was that peer-to-peer consumer lending is by and large the largest model, and this is inclusive of the Chinese data. When you remove China, it also is one of the largest models as well. I'm going to skip over this because I know that we're running out of time. The Canadian landscape is actually fairly diverse, especially when you think about the breadth of different model types that we see. Certainly we have a lot of balance sheet activity. We also have more orthodox peer-to-peer lending activities. And for the most part, you see growth in many of the models. So those that have a green arrow above them have all seen an increase in the past year. And some of these increases have been fairly significant. What you will note is that the increases that we're seeing have been really related to some of the balance sheet activities. And we've seen a drop in some of the more orthodox peer-to-peer activities. This could be a shift in, this could relate to a shift in some of the different institutionalization and partnerships that firms have with sort of more traditional finance actors who are the counterparty when fulfilling different, in particular, consumer-based loans. We also then note that for the first time, we've been able to capture data on invoice trading. This is the second year that we've been able to capture data from revenue sharing models as well. We do see, though, some significant drops in the balance sheet property lending and real estate crowdfunding space. We are going to be monitoring this in the coming year because we do feel that this might be a slightly artificially low figure based on a few firms that were unable to provide 2018 data. Nevertheless, we see a fairly broad taxonomy, which shows to me or indicates to me that the Canadian marketplace is actually fairly diverse and active in a lot of different things, not just in the debt activities, but certainly in equity and non-investment based. One thing to point out is that unlike other other countries like the United States or the United Kingdom, donation-based crowdfunding has a very significant role in the Canadian market. It is possibly because you are just nicer people than the rest of us, but nevertheless, it is remarkable to see that actually the donation and some of these non-investment activities take up such a big share of activity. Turning to another key trend that we saw from this report was that of a focus on SME-based finance. So this is funding that went to a small business through an alternative finance platform or alternative funding vehicle. This is representative of 1,531 different platforms that responded to this particular question. It makes up about 66% of our observable panel. What we see is that, including China, we're at around 80 billion that was generated to a small business. When we remove China, though, we actually see a fairly big jump from 21 billion to 31 billion. And this is up 47% against the previous year. When we contextualize this within the Canadian market, we actually see that Canada is focusing a lot of attention on those small businesses. In fact, 62% or 560 million of alternative finance went to an SME within the Canadian border. And this was actually translated to just over 15,000 different SMEs that utilized alternative finance. Now, what we will note is that this is about a 7%, 6%, 7% increase against Canada's previous year with respect to SME finance. We see that there's a lot of emphasis from the debt-based models, so the peer-to-peer and balance sheet business lending and invoice trading. When we looked at the different sectors that were most representative, we saw that hospitality saw about 7% of all volumes, manufacturing and engineering saw about 6%, but then it actually is a fairly diverse and sort of sector agnostic approach to SME financing. When we then turn to institutionalization, this is really where we start to think about how traditional financial services or banks or other incumbents are utilizing or partnering with alternative finance platforms. And what we note is that in Canada, 54% of the firms have a relationship with an institutional investor, where that institutional investor is the counterparty that is facilitating the funding to those households, to those businesses, to that individual or business that is the fundraiser. In this case, we saw that this is 490 million. Now, what we did note was that against the previous year, we saw institutional investment become much more rooted in the alternative finance landscape within Canada. And this perhaps speaks a little bit to the shift that we've seen from more, orthodox peer-to-peer lending activities towards more balance sheet activities as well.
So an important factor that influences the development of an alternative finance market is regulation. And this pretty much preoccupies regulators and industry associations. What we do see in Canada is a mixed image of both platforms indicating that they are properly authorized and at the same time that they don't require authorization. This could be a result of not properly understanding the legal field in which they operate, or that there's a lot of provisional differences between the provinces. So this is something for the Canadian regulator and policymakers to look into and to further clarify. When we look into what are the greatest concerns of Canadian platforms, they identify cybersecurity breach and campaign fraud as the main risks that they are concerned with. And interestingly, not so much in changes in regulation as in other places in the world. When we try to see how does regulation affect the industry, we correlated the volume per capita and the percent of platforms in the country that indicate that regulation is adequate. So this is of course biased to the platform perception, but we still see, again, a positive relationship. The more adequate platforms perceived regulations to be, the higher the volumes per capita. Canada here is somewhere in the middle, but still well above the trend line, indicating a good fit overall. But we can say that, again, in comparison to other of the top leading markets up there is room for further growth. Another interesting impact of the alternative finance in Canada is the access of females to finance. Again, the idea behind this whole industry was to create more opportunities, a more democratic access to finance. And we see that this is fulfilled, but only to a certain degree. Females still lead in terms of donation crowdfunding or take a large proportion of other non-investment models, and also take a large proportion in the consumer markets, but are not heavily or sufficiently involved in business investments.
So when we now
But-
look at, oh, sorry, go ahead, Rotem.
But the interesting thing about Canada is that when you look into who is getting financed and by whom, we do see indications of this more democratic finance. So the absolute majority of people getting funding are identified by the platforms as underbanked. And at the same time, the absolute majority of fund providers are those that are either medium or low income contributors. So indeed, at least in the Canadian context, we see that alternative finance supplements and opens markets to underserved segments.
Thanks so much, Rotem. So now you've kind of gotten baptism by fire of what's been going on in terms of alternative finance globally, and certainly, you know, contextualizing that against the Canadian market. We are looking forward now towards kind of what our next data collection is going to look at and what that means, you know, globally, but certainly at a regional and then at a localized level. So I wanted to introduce a little bit to some of the looking forward that we're doing with respect to our own relaunching of the Global Alternative Finance Survey, and to introduce you to the work that we're doing on our COVID-19 rapid assessment study. So as with every year, we are going to be collecting our time series data. I really encourage the firms within the ecosystem to participate again and hopefully help us identify some of the gaps that maybe we missed in our last year. Because from observing the Canadian market, we actually think that there's quite a lot of growth that's been happening, in particular in 2019. We want to make sure that we capture that and that we really can focus on, you know, on what's happening. We also are working on a COVID-19 rapid assessment study. This is a project that is sitting alongside our Global Alternative Finance normally scheduled research. This rapid assessment we are working on in conjunction with the World Economic Forum and the World Bank. And the idea here is to really understand how the financial technology industry has been impacted by the COVID-19 pandemic, certainly with respect to sort of normal market performance, but also, and quite critically, when we think about the different governmental, regulatory, and policy asks and needs that financial technology might have in a post-COVID-19 world. To that end, we've actually expanded our taxonomy considerably. The COVID-19 rapid assessment looks not just at the digital lending and capital raising activities, but also at the firms in wealth tech, in insurtech, in reg tech, in digital payments, so on and so forth. We have a really wide taxonomy this year. And we've worked really hard with our partners to make sure that the questions that we ask can be sufficiently nuanced to all of these different verticals. It is our view that financial technology is going to be part of the critical solutions that governments, regulators, and policies put into place when thinking about, you know, the repercussions and reverberations of COVID-19. And the idea behind this project is to get a rapid assessment and a baseline of empirical data that can then serve as information and informative for those different stakeholders to use. So thank you so much for your attention. Certainly feel free to download the report. Let us know if you have any questions. I'd like to introduce my colleague, Karsten, who's been working with us on our alternative finance benchmarking research for these last several years, and who is also one of our leads on the COVID-19 project. He's going to be coming in today to talk to you a little bit about some of the key trends that we're seeing from financial technology firms vis-a-vis COVID-19, and then contextualize that into the Canadian context. Hi, Karsten. Thanks so much for joining us.
Hi, Tania. Thanks so much. And thanks so much also for the invitation to speak a little bit about how COVID-19 has impacted the global fintech industry. It's been quite an interesting journey, to be honest, to see how fintechs, and in particular like crowdfunding, digital lending, have reacted to COVID-19. All across the globe, we have seen a similar journey. And we are capturing this in the study mentioned by Tania, but we're also doing a second survey on the regulator's perspective. And it's interesting that despite the small size of some of these platforms, their impact has really been noticed by policymakers and by regulators as well. So I would say that in the first 2 weeks when most major economies went into a lockdown, the fintech industry almost came to a complete halt, especially on alternative capital raising, and a lot of financing rounds were initially stopped. You could, on the lending platforms, at least in Europe, you could see that the secondary markets were losing liquidity really fast. It was difficult for fintech startups to refinance themselves sometimes, and platform activity was in a chaos. But this lasted only maybe about a week or two when the platforms found their footing very quickly. So the initial response that we've seen from fintechs and especially from crowdfunding and alternative capital raising platforms is to use the network they have and the communities they have to inform SMEs and also retail investors about the challenges that they might face. So we've seen a number of platforms all across the globe which started out and telling people, what are the economic risks which are associated with their portfolio. I think this is a really good example of the quick speed of fintechs and in adapting to these new realities, that they thought that their reputation makes it necessary to be as transparent and as clear about the possible losses that a portfolio could take from these retail investors. So this was, I think, very much noticeable. And the second thing which was noticeable after about 2 or 3 weeks was that a number of platforms shifted their business models or included additional business models. So as an example, the Swedish platform funded by me, which is an equity-based crowdfunding platform, they started again their donation-based crowdfunding platform because they felt that a lot of SMEs wouldn't ask for investments, but would rather ask for short-term funding in the form of donation and sometimes pre-selling of services and goods. And we've seen this across Europe, certainly, and many other jurisdictions as well, that equity platforms allowed the SMEs which were fundraising on the platform to simply receive donations or pre-sell their services as it's being used in reward-based crowdfunding. So this was a really early response that came in after about 2 to 3 weeks. We saw a lot of platforms opening up their business models and introducing new products. We also saw a number of platforms reducing their fees. There are platforms which either reduced the fees for the capital raising or reduced the fees for consultation and opened up their platforms, sometimes even opened up new services for free because they wanted to use this opportunity where a lot of firms were seeking funds to onboard a lot of potential customers. And this I think marks the entry of the second phase of how fintechs have dealt with COVID-19. A lot of fintechs and especially startups in this area have seen it as an opportunity to onboard new customers and support companies in their own digital transformation process. So this is, I think, quite significant because no other industry has used this as an opportunity, the economic meltdown that we've seen, to restart their own business, but also have other businesses continue their own services. So in the second phase, what we also see is governments reaching out to platforms and asking about how crowdfunding, peer-to-peer lending, alternative capital raising can be put into use to distribute funds to SMEs and persons who are in need of that. And so I know that, for instance, in Canada, there was a lot of lobbying done as well on this to get the peer-to-peer lending, or to get the lending facilities of the government to be co-aligned with what the platforms are doing. I can just give you a few examples what has been going on. We've seen, for instance, in France and the Netherlands, that very early on, guarantee schemes were built by the government, whereas the government would provide a loan which was coupled to a loan on any of the platforms, or even making it possible to apply through the platforms to government funds. Essentially, the government said that the platforms have a lot of expertise in assessing the risk of SMEs and also facilitating digital payments. And so in that second stage of the COVID-19 response, governments made use of these facilities. And then I think we are now entering a third stage, where we already see in some countries, especially in Europe, a partial or the first stages of an economic recovery. Obviously, this is still very early, but what we see here is that traditional banks more and more collaborate with fintechs and with platforms. And this is the trend which has been described by Tania and Rotem earlier on, is that the COVID-19 has really put a lot of pressure on both sides to collaborate more in depth. And we see now governments recognizing this and using this in government schemes as well. So I would just mention the UK government, which has connected a convertible loan to an equity-based crowdfunding round. So if you have done an equity-based crowdfunding round on a platform before, you are eligible and you are based in Britain and you have your overwhelming business volume in Britain, then you are eligible for a convertible loan, which would allow you to cover any liquidity gaps. And I think this is also a sort of template for what many other governments in the next couple of weeks and months probably going to do. So as far as we know, I mean, this is really early stages, but we talk to regulators all over the world, and a lot of them are trying to understand how they can use the existing platforms to help the economic recovery after the COVID-19 crisis. But obviously, in some countries, we are still in the middle of it, and this is, I think, where something which Tania mentioned earlier on is still quite relevant, and the rise of donation-based crowdfunding and in many of these countries. What we see from the data, and which we will probably see in our COVID-19 survey, but also when we do the next benchmarking report, is that one market segment seems to have really grown, which is the so-called friend-raising, which is essentially platforms where individuals asking for support. And obviously, because there has been such a gap in many countries in personal finance, that these platforms have really taken off and have grown quite a lot. And so this is an example of a response of where we now, I think, like a large amount of people have been able to use these platforms to simply fill these short-term gaps which have arisen. So that's just like a very short introduction of how fintechs and how platforms have covered COVID-19. Obviously, we are still really in the middle of it, and hopefully our survey will give us a little bit more data on how that has shifted. I want to say one thing which is also a little bit negative, maybe, that we've seen this is only anecdotal evidence, of course, that some platforms have started to look at their staffing pre-COVID-19 and reduce the number of staff. We've seen this in some of the American platforms and so on. But and this is of course only my personal opinion on this matter, I see a lot of them actually bouncing back. So a lot of the large platforms are now actually actively recruiting because they see the COVID-19 as an essential business opportunity to expand what they've been doing very successfully before. With that, I would like to maybe give back to Tania and Rotem to also add their comments on how they see this COVID-19, and of course, looking forward to a discussion later on.
Thank you, Karsten. I think the findings from our current data collection effort will be the best answers. So we would like to encourage anybody listening and is working to help us fill the survey so that we can report back to you with interesting findings already this year.